used to make your living as a semiconductor analyst, so it's a space you have an eye on all the time because of what you used to do and what it still means to the market. NVIDIA, I joke about it. It literally is up almost every day. AMD, new high today. You got Broadcom coming this week.
Anything
Super Micro is
I don't know how to figure out what that's worth, but anything where they're mentioning AI-related terms on their website and their transcript seems to be up a lot, and we know those businesses are cyclical, and so I think that's the challenge, is if you miss the whole first $2 trillion, it's today the day you walk in and buy it for the first time, and then you're worried you get it wrong in both directions. If you're looking out 12, 24, 36 months, then there's going to be more upside to the very early phases of the trend. I think your question about the broadening, though, is always a good one. I think you saw we wrote over the weekend. I don't think Russell can outperform in a down tape. So if people are saying, well, I'm a little worried that we're going to get a pullback, then I don't think you go pile into the Russell for that trade just because it looks like it's cheaper on price to earnings. I think you have to believe they can outperform in an up tape, and if you are bullish and you think it's middle innings, then you're saying the gross margins for the average company are going to go up, and I want to own plenty of other things besides the Mag 7. And I think there's some intelligence to that view.
Well, I mean, even if you don't like the Russell and you say, well, a third of the companies in the Russell, they don't make any money. And then we have the regional banks to worry about and all that. Maybe don't use that as the tell of whether this market's broad, because it is probably the wrong place to look. I could tell you outside of tech, Disney, 52-week high. Darden, Lennar. I have a list. I don't know. There's like 100 stocks on my list, if not more. But I'm Darden, Lennar, Colgate, Costco, Marathon, Bank of America, BlackRock, J.P. Morgan. This is today. Okay, hitting new 52-week highs or all-time highs today. Danaher, Lilly, A.O. Smith, Copart, Cummins, Cat, Eaton. Don't tell me industrials aren't a good place to be. The manufacturing data is still kind of squirrely, and these stocks are going up.
We've said this a lot and written this a lot. I think it's lame to blame your, performance on the Mag 7 and say it's only been that. There's been tons of names that have gone up. That's a different question. The question about the Mag 7 is simply, can you afford to own zero or be equal weight when there's such a big piece of the S&P, and then you're having like a risk management issue. But there's been lots of alpha generative opportunities. We look at all the volatility we get on earnings. Like, it seems like every day there's Sweet Green's up 20 or something. There's plenty of stuff if you're a fundamental stock picker to pay attention to. I think what people don't really get is that there's so much money being run quantitatively with a 3-hour to 2-day investment horizon where they purposely don't trade around earnings. So it's the movement between earnings that's troubling people. Well, wait a minute, it worked on earnings and then it fades the next 10 days, or it kind of missed and then it rallies. Palo Alto missed and then it rallies the next 10 days. Like, there's a lot of stuff happening after earnings that I think is confounding people because the trading's not confirming the trend you heard on earnings. But I see a lot of dispersion.
All right, let me ask you this. I want to know if you agree with Tony Pasquarello of Goldman Sachs, whose latest note says the bullish thesis is clearly defined. We are perhaps in the middle innings of a major bull market. And even though he doesn't like the current location as a place to add incremental risk, right? I mean, he's alluding to the fact that we're up a lot.
Yeah.
He goes on to say the recent wisdom of a secular bull is a reminder to keep your eye on the ball, right? He's not the only one talking that way these days. You agree? Bullish, clearly defined, middle innings of a major bull market. That makes sense?
Yeah, it could be early innings. I mean, I could see us, having a nice several-year run where earnings go up a lot over many years. I have never met him. I've seen his stuff on and out through the years, and I agree with it a very high percentage. I feel like I have a bit of a bromance with him, even though he doesn't know me. So maybe you can arrange a little coffee or wine between us. I think he makes a lot of sense. Look, I think my view has been the Fed's going to be accommodative but appropriately, that gross margins are likely to expand and earnings can grow for several years, and you should be bullish on U.S. equities. I will not tolerate two arguments. One, that bond yields will back up and break the financial system. If you get nervous about risk, bond yields will go lower. We've seen that every single cycle. And two, that you like non-U.S. equities more than U.S. equities. All the major trends, whether it's AI or software or life sciences, disproportionately accrue to the U.S. equities. And this whole thing where it's optically cheaper in Europe, I think is a joke. And you want to play that trade, good luck to you. But Europe is good for vacation and not for stocks.